Hi, Leslie Koo here. What happened to the peace agreement, the negotiation between the US and Iran? So one day they said, we have agreed on the MOU, we have signed, but the next moment they were exchanging missiles, attacks, so on and so forth. And one day Israel and Lebanon signed on ceasefire agreement. But the thing is, the southern area of Lebanon was being attacked. All these uncertainty, flip-flops of whoever say whatever, still make the market very cautious and make the situations very volatile. So my take is, there is still risk. We can see it from the flip-flop after the signed MOU between the US and Iran. And I think at this juncture, nothing is certain. And that poses the risk to the economic growth, to the oil supply, oil demand. Who knows? The Strait of Hormuz will be closed again in the coming weeks. We are not certain that it will for sure remain open. So a lot of uncertainties, even after the signing of the MOU. The situations is still very volatile. That's my assessment. Whether both sides will ceasefire, whether the Strait of Hormuz will remain open, maybe close the next moment, it's still very volatile. We're not sure. This is my assessment on the current situations. What happened to the oil and gold price this week? Let's look at the oil price first. This is a baseline. And because of the volatile situations, anything can happen, despite being the signing of the MOU and signing between two countries about I'm not going to bomb you anymore, but this attack still go on. The oil price above the baseline and below the baseline is still carries a very high probability. So this is how I see it. The market will see it as the baseline, below $100. But I would think that there's a high risk that the oil price may shot up to above 100. Given the current situations, we don't know what will happen because we can't read the mind of the US and Iran and Israel, what they will do. And that's why the probability for the band on the upper band and the lower band next to the baseline carry a very high probability. But for me, I tend to be biased towards on the upward momentum of the oil price. Now, let's look at the gold price. This is a baseline. And the current situation is that because I would see that the risk toward the oil price is still on the upward momentum. So I would think that it makes sense that oil importers will still need to accumulate US dollars in case the oil price shot up per barrel. So what is the options to generate US dollars? Is to sell gold as well as US treasuries. That's why I see that the downward pressure on the gold price will be more prominent compared to the upward momentum. And on top of this, the oil price related US dollar demand, the expectation of future US interest rate. Because now, nobody is talking about a rate cut. No, it's either maintain or higher. One of the voting members recently said that he is looking for a rate hike this year. So, the expectation of no rate cut and higher interest rate will make the holding of gold less attractive. Because gold does not generate returns. You gain, if you're an investor, gold investor, you gain from the increase in prices, increase in the gold price. So the ounce of gold doesn't give you any like gold dividends, so to speak. That's why people will tend to not holding gold and put their money in the stock market. That's why we can see that the bullish momentum of the stock market remains pretty firmly intact. Yeah. So that is also another reason to keep the downward pressure on the gold price fully intact. And this is how I see for this week on the gold price movement, the risk on the gold price for this week. At this moment, I see that there is still strong support for the gold price at $4,000 per ounce at this level. So I would believe that central banks, especially China Central Bank, will buy gold at the low levels. I mean, we can see that from the China Central Bank statistics, foreign reserve statistics, the gold portions has been going up. It's on an uptrend. So I would see that central bank like the China Central Bank, as well as other central banks with deep pockets, would buy gold and as an avenue to recycle the US dollars generated from trade surplus and other avenues. At this stage, given the current environment, the US massive national debt, the US Treasuries seem to be less and less attractive to many central banks, especially the China Central Bank. It has been offloading the US Treasuries holding. So what do they do with this excess amount of US dollars after selling the US Treasuries? Is to buy gold. And of course, there are other reasons why China Central Bank will want to accumulate gold, despite that it does not generate any gold dividend or any interest, per month or per quarter, let's say. Why they do that? Well, that is another video. This is, on the whole, my take on the current situations, the gold price and the oil price for this week. Thank you for watching. See you in the next one. Cheers.